Afternoon, class. I welcome you to today's session, commerce, past questions and answers that we are going to discuss in our today's segment. Just get yourself ready and keep connected to Metric Hub. It is your channel for your examination preparations. Just subscribe and turn on your notification button to keep posted and connected to other lessons and presentations that are to come. So today we are just going to quickly answer some questions that have been compiled here. And on my board is questions and answers. I had already put some answers on there, which we are just going to quickly explain as we go on question by question, just to save our time. Our first question here is on production and trade. So the first question says, explain the term secondary production. Explain secondary production. I'm sure you remember the sectors of production where we said the primary, secondary, and tertiary. So what is happening here is we need to only talk about secondary production. Secondary production is the second stage of production. It is the second stage of production. The question, our answers, it is the second stage of production, which includes manufacturing, where raw materials are converted into semi-finished goods or even finished goods. We are saying raw materials. Raw materials, these are the inputs that are used in production. So the question wants you to understand, you need to show to the examiner that you understand and you know that production, secondary production, it has to do with manufacturing. Manufacturing, where raw materials, which we are saying the raw materials are also termed as inputs, which we can also call inputs in production. Inputs are converted into finished or semi-finished goods. We talk about e.g. tanning, baking, making cloth, any other examples that we can give in constructive industries. We talk about building of houses, roads, and stuff. So what we are saying is that raw materials are converted into finished or semi-finished products, which you need to understand that when you answer this question, you must give also some examples as we have given there, like to say, we are talking about tanning, we talk about baking, we talk about making clothes, which is textile. Textile industries. So in this regard, what you need to understand is that production actually has to do with the conversion of raw materials into finished or semi-finished products. And then you give some examples. For example, we are talking about building of houses, building of roads. We have got certain raw materials that are, for example, we talk about bricks and stuff. We talk about roofing timber and stuff. We are saying in that regard, there is production taking place. It is secondary production taking place. Our second question is saying, what are the advantages of mass production? Advantages of mass production. Advantages of mass production. What are the advantages of mass production? If you can check here, we are saying mass production, you need to understand that this is a production process where there is production of goods in large quantities or services on large scale. Production of goods in large quantities or services at large scale, which we can say maybe there is quite a large produce that is produced at a large scale, which we are saying, what are the advantages of that? It lowers cost of production per unit. We are talking about economies of scale that are achieved as a result of producing goods in large quantities, producing products in large quantities. in large quantities. We are saying what are the advantages for that? The advantages of that, we are saying in basic terms, we can say they are basic economies of scale. These are advantages that business enjoy by operating on or above a certain operational level, which we are saying as the business grows to a certain level or to a certain size, there are quite a lot of advantages that a business can have. That is, for example, lowers the cost of production per unit. Instead of producing 2 loaves or 100 loaves of bread in a day, the machine or the baker, he can produce more than that, which he can produce maybe like saying 1,000 loaves, where we are saying the advantages are there. For example, we are talking about the oil that can be used, we are talking about the electricity, we are talking about the fixed cost and stuff, which are costs that a business incurs regardless of whether it is operated or not. So by producing at a large scale, we are economizing on those costs of production. So it improves the standards of living for consumers because consumers are having quantities of goods, or they are having a good supply of the goods that they require. Goods becomes cheaper. Goods becomes cheaper to increase due to increased supply. I'm sure you understand the price determinants of goods and services. An increase in supply would result in a decrease in what in prices. So when supply is high, when supply is high, when supply is high, we tend to have when supply is high, prices of goods, prices of goods they are less. So we are saying goods become cheaper due to increased supply, which we are saying these are market mechanics of market forces. Mechanics of market forces is to say when supply increases, the scarcity and demand and scarcity forces. So in this case, we are saying increased supply of goods will result in increased it results in lower price of goods, which would enable consumers to buy goods at a cheaper price. It may also lead to automation and mechanization processes. When production increases to beyond certain levels, industries and producers are forced to mechanize their processes of making of their processes of production, which we are talking about automation, as to say production can be done by machines, which is quite a good advantage on on that case. Standardization of products. Mass production results in standardization. Standardization enables products, standardization of products, which will enable which will enable goods goods produced to match into international markets. International markets. I'm sure that is quite a good advantage, that one. To say standardization, it enable our goods to be sold into global or international markets. That is quite a good advantage. As you can see here, the next point we talk about trade. As to say trade, as to say globalization, or it talks about international trade. We can be forced to enter into international markets. International markets. That is quite a good advantage in that regard in its own case. International markets, and then simplification of processes and products, which at the end of the day, when processes and products are simplified, it reduces production cost again, which would at the end of the day increase returns, or it increases what? It increases return on investment, which is profits. profit increases because of simplification of processes and products. That is quite a good advantage on that, on its own case. And then the next question saying, how does banking assist trade? How does banking assist trade? How does banking assist trade? Banking, it is an ancillary service. It is an aid to trade. One thing that we should understand, it's an aid to trade. We are saying in order for us to do trade, banking must be there. How does it help? It helps by keeping money safe. The safety of money is quite important, which we are saying using the deposit, savings account and current account, night safe, and so forth. So money is kept safe, which is actually one of the key requirements in for us to do trade. We need money. So money is kept safe by having accounts which are either deposit accounts, we are talking about current accounts, and also the savings account. Banking, it also helps to safeguard, other valuables, e.g. share certificates, title deeds. We are saying these can also be kept safe through, they can as well be kept safe through banking. We are saying banking can also help to keep them safe there. It has the safety of what? Of valuable items. We talk about safety of valuable items, which we are saying these items are quite important in terms of business. Business cannot survive without title deeds. We cannot have also the share certificates, as to say those people who are shareholders, their certificates are kept safe in terms of because of banking. And also makes and receives payments. It eases the payment process, eases transactions or payment process. Payment processes. I'm quite sure that you know that what is called EFT, electronic fund transfer, where money can be paid. We are saying, e.g., the convenience of electronic fund transfer, where money can be transferred very fast, instantly, without having to travel with bulks or without carrying the money, without moving from one point to another. People can do banking and can transact anywhere. We talk about checks, we talk about direct debit, we talk about stop orders, and then provide finance. Banking need to have, we are saying, how does it finance, how does banking promote trade, provides finance? This is like to say, it is like saying funding of trade, which we can say these examples such as we are saying e.g. loans. Businesses can get loans from the banks and then can do also overdrafts, which provide foreign currency or travelers checks, foreign currency, which is much needed money for international trading. We are saying for business to do international trading, there is need for what? For international, for foreign currency, and then assist in arranging letters for credit. Banks can also provide facilitation process. Banks can also give arrangement procedures and processes for credit or for borrowing of money, which is also quite a good advantage when it comes to what? To trade. Businesses need to have what? Need to have access to money. So in other words, we are saying banks or banking as an aid to trade, it actually facilitates through this. Quite a lot of time to understand that money, it needs to be kept safe. it needs to be, we also have the risk of being stolen, the risk of it being torn and so forth. So banking or banks, they actually provides the services that are quite important in facilitating and ensuring that what is it? Trade can take place. So banking to trade, advantages of banking aid to trade is that it keeps or it provides these advantages as I've actually indicated here. Let's quickly answer our next question. I mean, our other points again. Uh, banking to trade, advantages of banking to trade. Uh, advantages of banking to trade. It also provides interest. Interest is to say money, but when people borrows money, they need to what to get. I mean, we are saying bank advantages of banking to trade offers interest, which is a percentage amount of money that is earned on money borrowed. When money is borrowed, therefore the money it actually adds value, or it comes back with a percentage increase, which is quite a good advantage there. Provides information on markets. Our markets trade or businesses as they trade, they are not readily accessible to information. So they actually banking provides information on markets, which we are talking about both international and local markets. Banks provide such information, which is also as to say financial advices in terms of trade. Businesses, they need to know how to use their money. Advices on spending and investment. On spending and investment. Advices on spending and investment. It is also provided by what? By banking. As you can see, in other terms, we are saying businesses or corporate organizations and individuals that are involved in trading, they would have certain amounts of money or lump sums of monies that they might have made. In order for them to make sure that that money is not wasted, they need advice on how to use the money. So banking provides financial advice. I'm quite sure that we have heard of times whereby people either after from their pension money, it can be from any other paying out investments. Such monies, when they receive them, they would need a financial advisor, which actually gives such a kind of knowledge and information on how to use the money wisely. It gives trade references again, provides cash credit cards and so forth, which we are talking about switch cards, ATMs, any of them, which we are saying these provides convenient for trading. They provide convenient for trading. That is quite good. And then provides bank insurance. Banking also provides what? Insurance or assurance, which we are talking about security for businesses, which we are saying compensation in other ways. Compensation for in cases of disasters. I'm quite sure that you know that there are uncertainties that can also happen in businesses. So such uncertainties, we are saying they need to be taken, they need to be covered, and then they can also provide tele banking facilities, may act as stockbrokers, as in terms of banks, in terms of buying. We are saying buying and selling of shares, buying and selling of shares. That is quite a good advantage again, as or as executors and trustees. as to say, when people are doing business, banking can provide the facilities which are there, as to say they are given as what? As references, or as to say they are trustees, which can be used in order to facilitate trade. So those are some of the answers which we can give, as to say, how is banking an aid to trade? How is banking an important ancillary service in our economy? That is quite correct. And then next question is saying, describe the characteristics of a mail order firm. Describe the characteristics. Describe the characteristics of a mail order firm. That is our next question. Describe the characteristics of a mail order firm and why a wholesaler may be why may a wholesaler be eliminated from a chain of distribution? That is a distribution chain. Let's quickly answer that one. We are saying mail order firm are a large-scale retail outlet found in a private sector, which often operates from a warehouse, which is to say a big storage facility. A big storage facility that is located in the industrial area or outskirts of town where rentals are cheap, which means to say that a mail order firm, it requires a large space of land, large piece of land. So what we are saying that is that what is it? It is a large-scale retail outlet that is found in a private sector that is often operating, or that often operates from a warehouse. That warehouse is located in industrial area or outskirts of the town because they need a large piece of land. In that area, the land is actually cheaper. So hence it needs to be operated or located there. Does not need expensive premises or display. So therefore, we are saying, in order for the mail order firm to operate, it does not need expensive premises just to cut cost. So advertises extensively using eye-catching catalogs or magazines, and then employs part-time agents, which we are saying they are also servicing the mail order firm. It serves as a wide market. And then again it orders are sent and received through the post office or through agents. Goods bought by customers may be sent and received through post office, through post or agency, and delivered to customer doorstep. That is a mail order firm. We are saying goods can be delivered through post or agency, and again, it actually goods can be delivered to customer's doorstep. Goods bought may be retained if customer is not satisfied. Goods bought may be retained if customer is not satisfied, and goods may be sent to customers on approval. That is to say, when a customer is not satisfied with the goods that he has received from the doorstep, whichever that he has bought, we are saying they can be sent, they can be retained. And goods can be bought by cash with order. They can be bought with cash on delivery. They can also be bought via e-commerce, which we are saying marketing of goods through the internet, that is e-commerce, sells a wide range of goods. A wide range of goods are sold, and then customer shops in comfort way or his in the comfort of his or her home, because we are talking about what is it, e-commerce services that are provided there. So customers are buying at their comfort, in the comfort of their houses. We are saying at their convenient. wherever they are, the customers are able to what? Customers are able to buy convenient. If they are at their convenient, customers are able to buy anyway. Customer saves on transport cost. Instead of, we are saying it eliminates it eliminates because of elimination of traveling. So therefore, we are saying customer saves on it's customer save on what? Elimination on elimination of transport cost because there is no what? There is no traveling, elimination of traveling. And then in case high cost of postage, packaging, advertising, catalog printing, which we can say these are some of the additional facilities or functions that must be there. Packaging and advertising, they are there. Catalog printing and also enjoys limited liability. As to say that the prices also are often high, and then customers can shop at any time. I have already mentioned that to say customers can shop at any time because of international or because of the internet services. I'm sure that you remember and you understand that we have already mentioned advantages of business. We are saying the internet, the internet facilities, which we are saying it connects people or customers. Internet facilities connect customers to global markets. It connects customers to global markets, which is one other advantage again that we can give, as to say customers can shop at any time anyway. So they've got a wide range of markets to choose from. They can choose anywhere where they want to buy. So that is quite a good advantage in that regard. Our next question, reasons for elimination of wholesalers. Why should wholesalers be eliminated? We are saying why wholesalers must why wholesalers must be eliminated in the distribution chain. So what we are saying is that why wholesalers must be eliminated in the distribution chain. We are talking about any other. It can be because of cost, it can be because of the type of products, but what we are saying is that some systems of production or some manufacturers and producers and distributors or business people, they've come up with a process of distribution process which eliminates wholesalers. The wholesalers are taken out of the equation. We are saying, one, the growth of large-scale retailers who have adequate capital to buy in cash from manufacturers has led to the elimination of wholesalers. We are saying large-scale retailers who are large-scale are able adequate capital enough money. They've got enough money capital to buy goods in cash from manufacturers. So there is direct dealing, which are talking about direct dealing with manufacturers. It has got to do with that. And then buying goods in bulk. I am sure that you have seen that quite often again. When retailers are buying goods in bulk, sometimes it is possible that the manufacturers can also deliver to the retailers directly. And also there is built their own warehouse. The large scale retailers have got their own warehouse. So we are talking about the storage facilities which are regular, which are available, storage facilities which are available for what? From the retailers also. And then they've got the handling capacity of the goods. We talk about advertise on large scale by the large scale retailers, and then also the retailers have got their own, they have got also their own transport. They also have their own transport, which is also a good advantage in that regard. uh, Manufacturers have their own retail shops in order to push their products. In other words, we are saying manufacturers, it is kind of an extension where manufacturers would also set up their own retail shops. They set up their own retail shops, setting of their own own retail shops by what? But manufacturers, in order to promote their product, can also lead to the elimination of wholesalers, and then expensive slow selling goods to avoid tying up capital, whereby goods are distributed through the normal extended bureaucratic distribution chain, which involves the wholesalers. It is also delaying in terms of the cashing out or returning on investment, where we are saying, for example, the goods are selling slow, so therefore it would end up tying up capital. So the manufacturers would also maybe go straight, so therefore they can be able to sell straight to the what? To the retailers. The development of technically sophisticated goods that needs after sales service. We can talk about electrical or IT staff, technical staff, which we are saying there is need of the installation and the setting up of the product. For example, we can talk about issues to do with let's talk about the technical stuff such as IT components, setting up of maybe, let's say, servers, setting up of internet connections, setting up of any other data related what you call services. So in that case, we are saying that sophistication of goods or the development of technically sophisticated goods which need after sales service from the what? From the manufacturers is also caused the distribution chain to eliminate the what? The wholesalers, and then tied shops which sells goods from specified manufacturers, e.g. filling station. We are saying these are filling, for example, sell goods from specified manufacturers. These manufacturers, they don't need to what? To actually have to go through wholesalers, because they are actually having their specific shops that are connected to them. Also, the idea of the development of perishables or fragile goods, where handling of goods has to be kept at the where handling of goods has to be kept to a minimum. So we are saying these goods which can turn goods that must be used fresh, goods must be used while they are very very fresh. So we are saying fresh, and also they might be also saying they are volatile or can easily break, So in that case, we are saying in order to avoid chances of the breakages and or eliminate breakages, distribution must be going straight to the user or to the consumers. We are talking about also the perishability of the goods. They need to be also be, where perishable goods are distributed, they need to be sent directly to what? To their manufacturers. Where goods are made to order, and then certain times goods are made according to the orders that are specified or that has been requested. Hence, they have to go straight to the what? To the order. And then where mail order is used, we also have where branded or prepacked goods are sold. These are goods which must go direct, they have to go direct to the consumer. They might have to go direct to the consumer, or they must go direct to the consumer or the owner, because they are certainly or they are specifically branded. Manufacturers who sell door to door, there is also such to say direct delivery. The issue of direct delivery of goods also results in what? In elimination of what? Of wholesalers. At the same time, we talk about voluntary chains, and goods bought directly from manufacturers are cheaper also. That has to do with the elimination or reduction of production. We are talking about reduction of cost. Reduction of cost are there, which are because of goods are bought directly from the manufacturers. So we are saying there are some certain discounts which can be achieved by what? By businesses, by buying straight from the manufacturers. So please take note of that. And then next question, describe the contents and use of the following: consignment note, consular invoice, and also bill of lading. Number A, what is a consignment note? A consignment note, we are here. And then what is a consignment note? It shows date of issue and address, name of transporter, which is a transportation document. For example, date of dispatch of goods, which is to say when the goods were released, date when goods were released. That is the dispatch date. Consignment note number is to say which batch number were they. The batch number, that is to say, that is also found on a consignment note batch number. Also, names and addresses of the consigner or supplier and consignee, the buyer, they are given also on the consignment note. So on the document, we have got the name of the name and addresses of the supplier, and also the names and addresses of the consignee, which we are talking about, as to say the what, which we are saying as to say is also the same as the buyer. Addresses or place of delivery, if different from the above, also are identified, including the type of goods. What are the goods carried there? The types of goods carried, which are also specified there. The types of goods carried is also specified. Quantities of goods, obviously, when goods are transported, there must be also the quantities. Freight charges, which are cost of transporting the goods, is also indicated there. We also have it accompanies goods being delivered. It is sent together with the goods. That is the consignment note. This, we are saying, details of the consignment note. Those are the details of a consignment note. We are saying these are the details of the consignment note. So please, class, take note of these. We are saying it actually, the consignment note has got all those information. It actually, it is used by a transport firm when transport is used or is hired and is a contract of carriage. As to say, a contract of carriage, it stipulates all the terms and conditions of transportation of goods, all terms and conditions all terms and conditions for transportation of goods. For transportation of goods are specified. As we have seen above the data, we are having all those to say who is the supplier, his address, the address of the buyer, and also the quantities of goods, their types, and also there is also the date of dispatch. It also shows the type of transport that is used to carry those goods. So we are saying it is a contract of carriage, which we are supposed to understand that it is a contract of carriage, as to say all terms and conditions for transportation of goods are specified within the consignment note. It also shows the terms and conditions of carriage, who pays for the carriage. The terms and conditions of carriage are also specified in the consignment note there. I'm sure that you can agree with me that the person to pay for the carriage is also specified there. And then the consular invoice is a document used in international trade, which we are saying it is what? It is foreign trade. A document that is used in international trade, used where imports duties are charged, where we are saying ad volume also, that is on value, and then contains a declaration by the control of the importing country resident in exporting country. I'm sure that you can see we are saying it is used where import duties are charged, and then it contains a declaration by the control of the importing country, where the country, for example, to say Zimbabwe is importing from South Africa. So we are saying it is also indicated there to say importing country resident in the exporting country certifies that prices and quantities of goods stated on the invoice are correct. It actually gives that information of the goods that are carried and also their prices, that they are correct, provide customs officials in importing country with the reliable information. The for example, we are saying, e.g., we can talk about our Zimura officials. They need to know that the consular invoice, it actually provides customs officials in the importing country with reliable information. Customs duty can be assessed without physical examination of goods. So as we have said that the consular invoice, it's an international document for imported goods. So it therefore declares, it actually gives the narrative of the goods that are there, and then the customs are actually going to use that is a reference of reliable information. And then custom duty can be assessed without physical examination of goods. That is the advantage there. Without physical examination of the goods, the condition of goods is noted, and then speeds up the clearance and delivery of goods. That is what is saying. It saves time at points of entry. As to say, we are talking about the border post, the borders there. So we are saying it also speeds up the clearance delivery of goods there, shows the names and addresses of supplier and customer that are also shown there. Who is the names and addresses of the suppliers and customers are noted, are stated. They are stated there, stated on the document. So please class note that these kind of things are also quite important, and then contain detailed description of goods. That is why we are saying the detailed description of goods would allow assessment or customs services to be offered without physical examination of the goods, because the detailed description of goods is provided, such as we are saying types of goods, their quantity of goods, and then price of goods, which we are saying they are used as references for the declaration and charges that are on the import duties and stuff. Accompanies the goods being exported. I think we have already mentioned that. You have to prevent importation of prohibited goods, goods that are not allowed, goods not allowed to enter the country. To enter the country can be easily identified. I think you can see that is an advantage there. Goods not allowed to enter the country can be easily identified. That is a good advantage there with this consular invoice. And then bill of lading. Bill of lading, we are saying it is used when goods are transported by sea, ship, or vessels. That is quite a good straightforward point there. It shows the description of goods to be transported, e.g. the types, the max quantity, they are shown on there. It shows port of loading and port of unloading. That is to say where they are being taken from and where are they being offloaded. And then the name of the ship is also specified there. The name of the ship is also specified. Names and addresses of exporter and importer are also identified on the bill of lading. And then we also have the number of the bill, the name of the shipping country, the freight charges that are involved incurred there are also shown there. And then terms and conditions of carriage, which we say that it is a contract of carriage, is similar to the above point that we have mentioned again. It acts as a receipt of goods on board of goods on board in a ship. That is quite correct. Act as a receipt of goods, so we can be able to see all the goods that are on the ship or that are on board in a ship. And then it is used also in international trade, and then accompanies goods. That is quite clear. And then we are also saying that advises the importer when to expect the goods, the date of delivery. That is also indicated there to say when are the goods to be delivered. And then act as a document of title, which can also be used as a negotiable instrument. It can be used for negotiation, which we are saying in terms of the transacting or movement of goods from one port to another port, from one country to another. We are saying that can be used in order, it can be used as an explanation of all the goods that are carried in there. Our next question, distinguish between a partnership and a private limited company. Partnership and a private limited company, that is our question. Distinguish between them. We are saying that is our question, and then our answer. Question and answer, we are saying distinguish between partnership. The question says distinguish between partnership and private limited company. I've just drawn a table here that can be used in that distinction. Partnership and private limited company. In most cases, please class, just take note that it is quite good to use this as a way of making it easier in your presentation of work. So what we are saying is that tabulate the information in most cases in order for the processes, or in order for your answers to be short and precise, and also to earn most of highest marks in the partnership. We are saying it is easy and cheap to form. A partnership is easy and cheap to form, difficult and expensive to form. A private limited company, it is difficult and expensive to form because of the legal processes that are required there. The legalities involved there, they are quite expensive, they are quite lengthy as compared to a partnership. So we are saying that is one, and then formed by at least two partners
and then it's formed by at least one shareholder, a partnership would need a minimum of 2 people. So what we are saying that it is what? It has to be formed by at least 2 partners, and then it's formed by at least one shareholder. A shareholder has to say a private company. One person can start his business, and then it is running as a PTY, a private limited company that can be also right, and then requires a partnership deed. A partnership requires a partnership deed. It requires a partnership deed. It requires a memorandum and an article of association, which is different from that one. It complies with Partnership Act, and then this one, we're saying it complies with what? With Companies Act. A partnership and a private limited company and their level of comparison, we are saying they are not the same. A partnership requires a Partnership Act. It is run through the Act or through the jurisdiction of a Partnership Act, whereas this private company, it is private limited company, it's run through the Companies Act, and then issued with trading license from Registrar of Companies. It is from the registrar, it is used with certificate of incorporation. Certificate of incorporation is used, and then in the partnership, it is a license from the Registrar of Companies, which is also another difference. And then no continuity on death of a partner is continuity of existence. A partnership is no continuity on death of a partner when such a partner, when one partner dies who can be an active member and stuff, we are saying the continuity of the business is compromised. The sustenance or the perpetual life of the business is compromised. And then this one has continuity of existence because it can be a legal entity which has got its own maybe services or functions that are running, whereby to say the one owner or one shareholder who dies, the business can continue to survive or continue to exist. Partners contribute capital. Partners, they contribute capital. And then here, in terms of having money to run the business, the private limited company can sell shares. We are saying shares as to say these are then sold in order to receive profit or in order to receive money or to gain capital. So when individuals buy the shares, they are buying a profit sharing margin from the company that we are talking about. And then we are saying the private limited company, it sells shares in order to raise capital. In this case of partnership, partners, they can contribute their capital. And then a partnership is owned by partners. It is owned by partners. It is owned by shareholders. Shareholders, who are individuals who have got a percentage of share ownership within the company, who receives the dividends, who receives the profit of the business, who has got a direct or indirect control or influence on the way the business is running. It's managed by active members, active partners, managed by managing director. The managing director runs the business. The managing director runs the business, I mean the private limited company. And then it is controlled by partners. It is controlled by the partners. They have got voices that defines how the business must run. But a private limited company, it's controlled by board of directors. It is controlled by board of directors. And then partners, they earn profit. In this case of a private limited company, shareholders earns dividends, which we are saying these are the profit margins that they receive at the end. These are the profit margins that they receive at the end of the business or at the end of the operations of the business. And then he has limited liability, he has unlimited liability as a private limited company, I mean a partnership. And then this one, he has got limited liability. As to say, the losses that affect the business can solely affect to the extent of the investment of the business. And then unlimited liability, it means the partners are solely involved in the losses the business can incur, which is to say that in cases of losses, the partners have to invest or has to put their monies, their private properties, in order to sustain or to resuscitate the business. So in terms of limited liability, the shareholders, they can only lose to their extent of investment. The business is treated as a legal entity, as a self-existing organization, which has to do with nothing with the influencing of the personal, wealthy, and individual shareholders' properties. So it's not a separate legal entity. I think I have already said that. That is to say, this one is a separate legal entity. It is a separate legal entity. That is one other thing that we should understand. It is the name which ends with PTY. The name ends with PTY. It ends with PTY Limited. That is a private limited company. It has got a name that ends with private limited company. And then we are also given in our question there to say a company's transactions were sales $30 million, cost of sales $18 million, overhead expenses $10 million, and then average stock at cost price, which is 5 million. And then we are asked to calculate gross profit, calculate net profit, and calculate rate of stock turn. So I've already shown profit is cost to selling price minus what? Profit is cost to selling price minus cost price. That is first question, gross profit. Gross profit is given as it is given as selling price minus cost price, or 30 million minus 18 million, which we are saying cost price minus selling price. What we are saying is that 30 million minus sales minus what? Cost of sales. That is to say, we get our what? Our gross profit. Our gross profit is given as to say 30 selling price minus cost price. That is 30 minus 18, which is given. That is to say, it is what? 12 million. 12 million selling price minus cost price is cost to gross profit. And then net profit is cost to gross profit minus expenses. Gross profit less expenses, it's gonna give us what? It's gonna give us our net profit. As to say, this is profit after expenses. That is net profit. We are saying when expenses has been paid off, we are saying how much are we remaining with, as to say it's gonna give us as economic profit, or it will give us just to say the business has made economic profit or economic loss. I don't know. So what we are saying is, just take to understand that it is gross profit minus expenses. So our gross profit is given that 10 million, and then our profit is given there, as to say we are given that gross profit minus expenses. So our gross profit is 12 million that we calculated here, minus our what? Minus our expenses. Our expenses are given as to overhead expenses, which is given there to say that it is how much? It is 10 million. So we have got our what? Our 2 million, as to say that is our net profit. And then rate of stock turn, cost of sales over average stock, cost of stock over average stock. It is over average stock, and then we can be able to get what? we can be able to get our rate of stock turnover over average stock. So our rate of stock 10 is given there. How many times is our stock turning? Cost it's given to say cost of sales. So we are saying which is given as to say our cost of sales, which is 18. Cost of sales is given there, which is 18 over average stock, which is cost to average stock, which is cost to 5. And then this is equally the same as to say 3.6 times. 3.6 times. Hence, we are saying it is giving us our rate of stock turnover or our rate of stock turn. That is equal to 3.6 times. So please, class, take note of these formulas. Take note of these formulas, because if you don't get them right, you won't be able to understand what's happening. So I'm sure that you are going to have a very good time, and then please do not forget to subscribe and turn on your notification button, so therefore you can be able to have our next presentations and classes. Thank you very much. Tell your friends to tell another friend. I'm saying subscribe and turn on notification button. Thank you, and all the best in your final examinations. Good day.